Nikola stock investors will be happy to hear that the company is making huge steps towards profitability after millions and millions of losses on the bottom line. I'm sure Nikola stock investors are eager to hear the good news. So let's get right into the ways that Nikola stock is making giant strides towards profitability. So the CEO was asked that question, what initiatives is the company taking to reduce spending and achieve profitability? And the CEO responded, well, look, some of the immediate steps we're taking right now include making the decision to go with hydrogen fuel trucks instead of battery trucks, because the hydrogen fuel truck is a preferred solution for their large fleet customers that need to go 500 miles per day. So focusing on the hydrogen fuel instead of both the battery and hydrogen fuel will give the company more focus and reduce spending on two different initiatives. So we're also focusing on the North American market, selling our stake in the European joint venture Iveco. That's going to be huge because we are no longer required to commit precious capital to the European joint venture. They were previously building and developing 4 trucks on 2 continents. They've reduced that now to building 2 trucks on 1 continent, cutting their programs in half. So this is a huge step towards profitability for the company by reducing the focus on fewer items, fewer geographies, and getting the products down to just 2 trucks. Right? That allows narrower focus, which will reduce capital spend, right? Spreading out all your capital expenses across the four trucks on 2 continents, now to 2 on 1 continent. So narrower focus allows you to achieve targets sooner in those 2 trucks, because now all of your focus is on those 2 trucks instead of 4 different trucks. That will let you get down the path sooner, reach economies in scale sooner, sell large amounts of these trucks sooner, which will reduce the cash burn because some cash will start coming in from sales, and you can reinvest that cash and grow and reinvest and grow and reinvest and grow. And so all of that is really good news and makes it easier for the company to achieve profitability. And later this year, Nikola is going to be the only company with the fuel cell electric vehicle available for purchase. That's huge. That's huge, being the only one in the market with the truck available for purchase. So they're going to be selling their existing electric battery truck inventory, right? Whatever they already have, they're going to sell that, get the cash, right, which optimizes their working capital, and they won't need to hold those raw materials or the inventory on the balance sheet. But more importantly, they're going to move to a build to order product, build to order. What that means is they're not going to make the trucks until they have the order to make the truck. A customer deposit an order in writing, a sale, and then they make the truck. And that in that way, right when the truck is finished, it goes to the customer. The company doesn't have to keep it on its balance sheet in garages, taking up space, taking up capital. It just sells, it just makes what's ordered. And that's a big improvement in terms of utilizing cash flow and achieving profitability. So they're also working with new financing partners to reduce accounts receivable as dealers get on floor plan financing. So that's also positive, right? If the company doesn't have to finance these trucks, meaning like it sells it to a customer and the customer pays Nikola in increments in payments or over 3 months or over 6 months. If the company can get the cash immediately, then that cash can be invested in making another car, and that way they can make more cars. I'm sorry, make more trucks, make more sales, turn that inventory around, use up that manufacturing capacity, and not sit idle. So this is also another positive news. And it will find new retail financing customers to enable end customer sales. So it'll boost sales because Nikola won't be constrained from financing, because if it has an existing amount of accounts receivable, it can't continue to make sales because it's already used up all its cash because people owe Nikola money, and Nikola just needs to wait to get paid before it can do anything else. So all of these moves are positive steps towards achieving profitability sooner. And you might say, well, that's too good to be true, right? What's the downside of all of this? Why didn't they do this sooner? And the downside is that it lowers the potential profitability in the long term, right? When you take some of these measures that boost profitability in the near term and reduce risk in the near term, it has the effect of reducing some of the upside longer term, right? Of course, there's more upside if you've got more models and you're operating in two different continents instead of just one region, right? That's more upside potential. But it's also riskier and it also requires more capital. So by reducing that, Nikola improves its profit prospects in the near term at the expense of some of the long-term upside potential. But that's not forever. After it achieves success in this region, it can still reinvest and grow and expand its fleet and expand geographically, right? Doesn't mean it has to stick with this model forever. Just in the near term, be more focused and then grow incrementally instead of all at once. So overall, I think it's a prudent move. I think it's the right move considering the much higher cost of capital today versus a year ago, 2 years ago, 3 years ago, when maybe some of these decisions were initially made and interest rates were at 0%. Now with interest rates at 5.25%, you've got to be more conservative with the capital, and I like this move. I think it's the right move at the right time. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.